The Aussie versus US dollar is moving lower with the higher US dollar overall. I'll go through the technicals as this currency pair trades to its lowest level going back to September 29th. So let's get started. I can't say that today's day has been anything but volatile. We had an initial move to the upside, and then a move to the downside, and then a move to the upside, and a bigger move to the downside. That bigger move to the downside has now taken the Aussie versus US dollar below some key technical levels. Specifically, I speak of this swing area right through here, which is home to a number of different swing highs through here, and then it fell below the level here and started to use that level as support for the most part through here. Also near that level is a 50% midpoint of the move up from the August 21 low to the high price that we saw in the month of September. The 50% came in at 0.65603. And recall from yesterday, the price came down through that 50%, through that swing area on a number of different tries here, but the momentum faded on each of these breaks lower, and the price rotated back to the upside. That move to the upside did extend back above the converged 100 and 200 hour moving average, not once but twice. And the second time even made new highs in the U.S. and North American session right here. But that gave way, and we started to see rotation back down below the 100, 200 hour moving average. In the last 5 or so hours, we've seen steady declines taking the price below the 50% retracement with more momentum. So what does that tell us now as traders? Well, first off, I'm going to put a horizontal line right here, right near the 50%, right near the low of the swing area, and say we can't go above that line. More conservative traders might say, okay, I'll give it up to this level right here at 0.6567. So this area right here is now resistance. As long as you know that the price can't go above that level, you can focus on the downside targets, and the downside target would have the price testing the 100-day moving average. Now, this is a different animal. Why? Because we found support here against the 100. We found early support here against the 100-day moving average. So the last 2 times the price came down to that 100-day moving average, we did find action by the buyers leaning against that level. And over here, although the price moved below both the 100-day moving average and the 200-hour moving average at the same time, that couldn't be sustained, and it started to rally to the upside, and we haven't been below that 100-day moving average since then. So be aware that down there, down at that 100-day moving average, there's going to be support, and it'll take a move below that level to increase the bearish bias out for this pair have traded, perhaps looking down toward this level right through here as the next key target. But what we know from the price action today and from yesterday and from going back through time, that this 50% is now key resistance. That's what we can build our house on and hope that the momentum continues in that direction before stopping us out. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.